Hi, my name is Alex Carlucci with Gustan Associates. We're going to talk today about compensating factors for manual underwrites and how we have no overlays here. And overlays can really interfere with your ability to get a mortgage. And the guidelines that FHA and VA put out for manual underwrites are very clear, and we underwrite directly to them. Let's start off about the easier VA manual underwrite that we have, that this is the best in the business. There's no better VA manual underwrite around. We will do 54% DTI when most people stop at 45, some 41, some might go to 50, but we go to 54. All we need to qualify a VA for a manual underwrite, if you don't get approved eligible, is 12 months, no lates on anything. So you can't have a collection that just started, went to collection in the last 12 months. You can't have any late payments on a credit card. You can't have anything that says you're late in the last 12 months. If you have that, you have to have some credit cards open. You can't have no credit either for the VA manual with 54 DTI with no lates. If you have no credit whatsoever, we can do a manual underwrite, but that's a different story. Let's talk about the one where you get referred, and let's say you have some collections and you get a refer eligible. If you have no lates in the last 12 months, the collections are older, they went into collection 5 years ago, 3 years ago, all you need is 1 month reserves in the bank account. What that means is after you close, so you paid the closing cost, your down payment, obviously with VA there's no down payment, but let's say after you close, you have 1 month mortgage payment in the bank of your own money that you saved from your payroll. That can't be gifted to you. Your closing costs can be gifted to you, but not the reserves. That is the VA manual underwrite, best one in the business, best one in the country. Can't beat it, give us a call for the VA manual underwrite. For FHA, it's a little different. FHA compensating factors go as this. You're going to need compensating factors to go along with no mortgage lates in the last 12, no installment lates in the last 12, and no more than 2 times late in the last 24 on a mortgage or an installment. And you can't have anything greater than 1 times 90 in the last 24 on a credit card. So if you fit that, you get a refer eligible, and then you have compensating factors. So the first compensating factor is an easy one. It's like the VA. If you stay 31% over 43% ratio, then you can do 1 month reserves in your bank account. If you go 37 over 47, you need one of the compensating factors, which I'm going to cover in a second. And if you go 40 over 50, you need 2 of the compensating factors that I'm going to cover right now. Compensating factors are as this. First compensating factor is having 3 months reserves in the bank. It's your money, not a gift to you. Number 2 is to have no payment shock. Payment shock is your current rent is $1,000. You don't exceed $1,050 for your mortgage payment with all in, principal, interest, taxes, insurance, PMI. And with manual underwrite, you usually need to prove rent. There's one case where you can get away with not proving rent if you live with your family. But then you're going to have payment shock, and you're going to have difficulties with the underwriter saying, how can you qualify? You're not used to paying any rent, any mortgage payment. You know, show me a reason why you're okay with this payment shock. And that usually means show that you have the ability to save money. Because if you're not paying mortgage or rent now, you should be saving money. So that's how they look at that. So save money if you live with the parents and you're about to get a manual underwrite, FHA. So first one's 3 months mortgage payments. Second one is no payment shock. And then verifying rent is also important. But no payment shock is a compensating factor. Number 3 compensating factor is passing the residual income test. The residual income test is a formula we put you into, and it kicks out a number. Let's say it's $500 is your residual income. It's basically your net income minus some of your expenses, like your electric, they're guessing what your electric's going to be, and then the size of your family. So then they put that into a little formula. They compare what you should have. If you have enough to cover your residual test, then you pass it, and that would be considered another compensating factor. I use that one a lot when the other 3 fail, and that one saves the day for me. And the 4th compensating factor is you have additional income we're not using towards this transaction. One example is that you're going to get a bonus going forward, but you didn't get it the last 2 years, but you got it last year and you're going to get it this year, but you haven't gotten that second bonus yet. So that's additional income that we're not using to qualify you. You work 40-hour work weeks, and you just started working 50-hour work weeks a year ago, So we can't use that extra 10 hours of work weeks because you need to receive overtime for 2 years to use it. So that's additional income that we're not using to qualify. That would be additional income that would be a compensating factor that will allow you to pass the compensating factor test. So for the 37 over 47, you need one of those. And for 40 over 50, which is the max, you need 2 of those. And we don't hit you for charge-offs, and the collections, we're going to hit you for 5%. A lot of investors out there will hit you for the charge-offs. They'll hit you, they'll say you have to pay this collection off. They'll have credit score requirements. We'll go down to 500 on the manual underwrite. So not many people will do that. We have no overlays. We're the best in the business at manual underwrites, VA and FHA. So give us a call. Please like this video, share it, and if you have any questions, leave them below. We'll get back to you. Thank you.